Hi, Chart Gal Lori here. I'm part of the Chart Guys community. I'm a technical analyst and a full-time trader. I'm going to do the market recap for May the 11th, 2023. I'm covering for Charting Man Dan. We had tug of war today. It seems as though we have equally equipped opponents. The bulls and the bears, they're fighting, and it's just causing this major push-pull. And we finished the day with an inside bar. If we look at this hourly chart, it really shows the fight from higher high, lower low, lower high, higher low. So overall, it's not disastrous. The problem is we're using up so much buying power to get these pushes up, and we're taking buying power off of the sidelines. And what's going to happen when there's no more money to buy these dips, these severe dips, to have to run it back up again? And I'll go ahead and use the analogy of basketball. I love sports. We have Apple. Let's look at it. Apple. Green today. Chart looks beautiful. Amazon, beautiful. Google, beautiful. Netflix, wonderful day. So this is our LeBron James. This is our Michael Jordan. We have all the big dogs in there, Kobe Bryant, and we still can't win the game. What happens when we have to pull them out and they need a breather? We're going to need another Kobe to step in or another LeBron to step in. And the big names are the ones pulling the cart right now. And that's what I foresee to be the problem, is we can't win the game, i.e. the bulls can't succeed and get through resistance, and they have their big players in the game. So if we look at the big players in the game that I'm referring to, Google was huge up green today off their conference yesterday. They had some bull staying power today. We had Meta green. We had TikTok news. We had communications overall green. Amazon had a beautiful day. Netflix had a major breakout today. Tesla had a green day. And then we had consumer defensive was green. Everything else was red. So again, that's that push-pull that I'm referring to. So let's go back and look at these tech charts, and then I'll go back to the sectors. So if we look at Apple, we were unable to get through key resistance initially today. We went up to that 174 and then we recoiled. And then now we pushed past 174.30. But if you trade or analyze Apple a lot, you know it has a tendency to do this. It has that look above and fail tendency. And I just wonder if this is indeed another scenario of that. We have that big resistance at 175.59. Amazon, it was able to get over that very large resistance at 110.86, major accomplishment. And we had resistance immediately overhead at 114, but we closed the day strong. These pullbacks are going to be for buying in these big names: Google, Netflix, Amazon. Your first 5-minute oversold, 15-minute oversold during regular trading hours. And I put that in quotation marks because, of course, there are certain conditions that apply. And we want the market to be going up. And we don't want any associated negative news. Okay, so we looked at Amazon, Google, major continuation day. Now we have a gap below us at 112.94. Gap bulls. Google bulls will need a breather. It just happens. It's natural. And that could be a buying opportunity. I think I've already had my alert set. Yeah, for first hourly oversold. I want to know when that hits on Google. This was an outsized move up, and I want to be there for the dip buy. Microsoft had a red day, very ho-hum. It was unable to get over resistance. Nvidia, unable to get over resistance. And Netflix was able to get over resistance, and in a beautiful way on high volume. We had about 160%. So about 60% of the normal volume over and above. So average is 5 million, and we had 8 million today. So lots of volume, big move. They benefited from the Disney earnings yesterday, losing subscribers. The Netflix bulls benefited today, and it helped that Netflix earnings was already out of the way. So the thought process is that the people or subscribers that are leaving Disney are headed over to Netflix. All right. The problem child is XLF. We all have our problem children. I have a couple. The XLF had a pretty rough day. We're just kind of hanging out below this hourly 50 EMA, and I like to call that my Great Wall of Louisiana. I noted it in pre-market that would be a major issue overhead. We broke through the low of the prior day, but without a lot of follow through. I would say that was a big save by the bulls overall. Daily, we're still skating down this daily 50 EMA and the EMAs. We want to get up and over that for XLF. To kind of push us higher, knowing that QQQ bulls will need a rest eventually. XLV broke bear. It broke bear out of this tightening range, 131.84. It broke bear by 30 cents. Not a lot of follow through there either. I would say that's great defense by the bulls. Okay, now let's go look at the indices overall. We have to be careful that we're not forming a daily head and shoulders here. Typically, you want the right side of that head to not break the neckline. 4062 did break the neckline, but I think the psychology is there and it's worth mentioning. And if we look at these EMAs, we are flat. So I like to refer to SOTEMA, slope of the EMA. If your slope is going up 45 degrees, that shows you who's driving the bus and how fast they're driving it, the bulls. If your slope is going down real steeply, let's say it's more than 45 degrees, if I can draw that, that shows you how fast the bears are driving the bus. In this situation, look at these EMAs. The slope is 0. They're flat, super flat as we go sideways. Again, the bulls and bears are very equally equipped. Okay, NQ. NQ, the EMAs are a different story, which we know that tech names are really pulling hard here. We can see the slope of the EMA, and look at that gap between the 8 and 21 EMA. That just shows the velocity that the bulls have on this push up. All right, and YM. YM is holding the 50 MA and the 200 MA by the hair of its chinny chin chin. It looks pretty weak. RTY still has a potential daily inverse head and shoulders on the table. It doesn't look pretty. 1741 held, and we hit 1739.60. I would still call that a daily double bottom. Bulls are going to want to defend this level tomorrow and get up and over that daily 50 MA. Gold, I was looking for that 12-hour lower high. If you follow along on the pregame show, I was looking for that lower high relative to 208.54. So congratulations, gold bears. We are at the 12-hour 50 MA, and we're at the daily 21 EMA. We're holding this low over here of 2007. So we have uptrends on most time frames, and 12-hour is a current EQ, and now daily is an EQ. So we'll see 2007 can hold on gold. Dollar had some relative strength today, and that weighed on the gold bulls. We have 4-hour inside bars right now and a potential 4-hour bull flag. Nat gas, this is a, sorry about that word, pre-game I called this chart dog doo-doo because this chart is just a wreck. It's an absolute wreck. Monthly downtrend, weekly downtrend, daily downtrend. 4-hour, it's a downtrend. Hourly, we bounced on inventory today and then we pulled back, potential bear flag right now. It is just a terrible chart. There is complete apathy. That's the word I would use. The bulls are completely apathetic toward buying this. Okay, did I cover it all? I think I did. And ARC, I am watching this name pretty closely. We are at the daily 200 MA. We are right there, and we double topped at 39.49 and 39.43. I'm watching that double top area for a potential short area. If we break through that, it could be a good long opportunity. All right, that's it for the market recap video. Thanks for having me tonight.